वेलकम एवरीवन टू आवर ट्विटर स्पेसेस. आज का एफएनओ पे चर्चा is with Mr. Abhijit Pathak. So about Abhijit Pathak sir, he is a market veteran with trading and investing experience of over 2 decades. He had mentored many traders and analysts and one of the few people to work on charts for the first time in our country. Currently, he is heading marketing and business development with Define Edge. And today we are lucky to have him here with us to discuss about the do's and don'ts, pros and cons of FNO trading. Welcome, sir.
Yeah, thank you.
Along with Abhijit sir, we have Peter, who is our product manager, and Manas, who is again our product manager. Both of them handles our Paytm monies, product and platforms, and their specialty is futures and options. About me, I am Shanko Mukherjee. I'm also having a bit of 2 years of investing experience and 2 decades, 2 decades of experience in investing and trading. And I'm working with Paytm Money, with the Paytm Wealth Academy as Edu Coach and Deputy GM. So, Abhijit sir, the first question which we'd like to ask you, how did you start your trading journey as a trader? So, I remember back then, so just the end of 2000, beginning of 2000 and end of 1990s, I mean, people used to look at traders or someone from stock market like someone like a taboo. The word stock market is a taboo, used to be a taboo back then. And so how did you start your journey then? And what had been your hits and misses?
Yeah, actually, I started, in the 90s. But of course, those days there was no online trading or anything, so it had to be with a broker. You have to physically go or call them, that kind of thing. So there was no trading; it was only buy and hold.
Absolutely.
And of course, that was not much because I got trapped in the Harshad Mehta top, and then after that I left it. Of course, that was completely sort of blind buying. So just because I read it somewhere, that kind of thing. And then I realized that this is not going to work, so I stopped. And around the same time, I had left. I'm a chemical engineer by education, by the way. And around the same time, I had quit my job and started my own firm, where I have always been in the oil and gas industry, and I was representing a British company in India. And because of that, I didn't have much time for the stock market. And slowly, that also started growing. So once at one point in the early 2000s, it reached a stage where it was almost on an auto mode because it was mostly to do with projects, capital goods. So it was not something which was on a day-to-day basis. And there was a lot of spare time in between. And around the same time, online trading started in India. That was, I think, 2001 or 2002. And I fell to that marketing gimmick of opening an account and all that. Of course, it's not as easy. It was not as easy then to open an account. Now it is a matter of 10-15 minutes. In those days, it used to be 10-15 days minimum. But I still did that. And then I started online trading again blindly. And that was late 2002, early 2003. And I had the worst possible start on 10th April 2003. When I say start, I mean a big day where I doubled my capital in a day. Now, everyone will be surprised, why is it the worst start? Because that is not the way to start a trading business, because that was a day when IT stocks crashed all across the board. Infosys was 40% down, Mastech was 50% down, and any IT stock which rose by even 1% intraday was smashed. And that's how I started trading. And it was only intraday trading, that too in cash, not future. Of course, I think that time futures was not there. I don't recall exactly. But and then within the next 2 months, blew off everything. Because in those days, once I realized I have doubled my capital, I thought I am the king now. So it's not as easy as it seemed to be, and then realized that this needs serious understanding. And of course, those days internet was not as good as it is now. It was not broadband at all. It was dial-up connection. I don't know how many people have used dial-up, and getting a connection to the broker terminal itself was a big achievement. And getting access to various, in fact, even blogs or any articles online was very difficult to get in touch with people. It was completely on you're on your own to learn. But still, I did that, and finally, I started learning the system of technical analysis. I mean, how to read charts, and right from basics. I mean, even the content on Google was also not much. But I found a mentor who gave me a book of John Murphy, and that was one book which I read start to finish overnight in a train journey completely. He gave it to me at 6 o'clock in the evening. I started my train journey at around 7:30 from Nagpur to Pune, and I didn't keep that book down at all. I reached Pune and I had finished that book. So that's when I realized that I have this passion to study and learn technical analysis. And then I started realizing that there is something on the charts which tells you what is likely to happen. Again, there is no sure shot thing. Likely, that is the biggest important word I learned. What is likely to happen? So there is no sure shot or anything like that. And then that journey started. That was after 2004, 2005. After that, I was introduced to futures and options by another friend. By that time, we had a lot of friends, online friends through Yahoo Messenger. Nowadays, it is easy to connect to friends through WhatsApp and Twitter, but those days, both of these were not there.
Yes, I
Yahoo
still
Messenger.
remember. It was like Twitter back then.
Yeah, Yahoo Messenger was the only. So if
Yeah.
you had someone, you would be included in some group. And then I got into touch with that mentor again, and he was the person who started his journey right in the early 90s. And again, technical analysis in those days was plotting the charts on a graph paper. That was what he had done. So that's why he had his basics completely right. And then he sort of became a mentor till 2007, 2008. And in that same group, I got introduced to futures and options. And again, when I saw options, in fact, the other friend who introduced me to options, that was an expiry day that day. I forget the year and date, but the stock was Gale. He told me to put Gale on my terminal, bring it on the watch list. And I think it was 180 call. Those days, Gale it was 175 or something like that on expiry date, 2 hours before the expiry. And he said, 180 call, सामने watch list पे रखो. And I think I don't remember correctly, but I think the lot size was 2000 or 2500, something like that. I brought that Gale 180 call on the watch list. It was 25 paisa, just a couple of hours before the expiry. And he said, "देखो अभी क्या होता है, and we'll talk after 3:30." And I got a shock of my life because that, I mean, the stock went from 175 to 195 in the next 2 hours. And that call went from 25 paisa to whatever 15, 17 rupees.
25
Then I saw that,
paisa. 25
yeah, sorry.
paisa.
Yeah, it was just 2 hours before expiry, right? So I don't remember the exact numbers, but it was something like that. It was expiry day, monthly. Of course, those days weekly expiry was not there. It was monthly expiry, and it was out of the money call because Gale was 175, 176, and it was a 180 strike price.
And it used to be American options back then.
Yeah, that was another different thing. Then I realized there's something in this, and so I started learning about options. So first thing was naturally, like I said, even then there was still slow internet. So finally I got hold of some articles for option Greeks and all that. But to be honest, I didn't understand it, much of it. It was all subjective to me. I mean, I understood the basics, but I didn't understand how to apply it, because the biggest thing in Greeks is there is a lot of subjectivity and you need to completely know the subject to apply it. It is not like, ye hua to wo karenge, it's quite complicated for beginners. I'm not saying it is a science, no doubt about it, but you need a lot of experience and it cannot be implemented straight away. So I left
and especially, sir, at that point of time, the books which used to be there, they were all international books.
Yeah, even
And
if you
the
order book, it
examples
used to take
were
about
all
2 weeks.
examples were all international examples.
Yeah, absolutely. Yeah.
So very difficult to understand.
And by that time, I mean, till then I was only looking at EOD charts because intraday data was not still easily available in those days. Everything was paid, of course, but even that was I had taken e-signal subscription. E-signal was quite expensive. It used to be, I think, $120 per month or something like that for only cash segment. If you wanted futures and options, it used to be, I think, another $100 more, something like that. I don't remember the exact figures, but that's how I started using the looking at intraday data. So 15-minute, hourly charts and all that. Then another friend of mine is he was an IT guy. He gave me a plugin to import data from the trading terminal to Ami Broker. Of course, I was doing Ami Broker license copy right from the beginning. From day one of my journey, it was always Ami Broker license copy. And then I realized I also started importing data for options. And then I realized that there is something on these option charts which definitely is tradable. Why not? I mean, if you treat that chart like any other chart, it is tradable, no doubt about it. I mean, it can be a 15-minute chart, it can be a half an hour, hourly chart or whatever. Of course, it is no use to use the daily charts. It has to be intraday charts. And that's how my uh, business with options chart started. And then I realized that there is a lot of times it suggests something which is not sort of very clear from the underlying, and that is where options chart started helping me. Then I developed the study, and of course there was no books. In fact, even now there are no books on that subject. A lot of people ask me for any books, and I have not come across any book which talks about these charts and how to interpret them. Because after that, I started applying the same charts on straddles and strangles. Because sometimes, of course, a lot of people talk about theta decay ka kya, how can the thing be charted. It was quite a sort of a controversial thing. Even now it is a controversial thing, but it works for me. So whatever works, fine. What about theta decay? That was the biggest question people used to ask me. I said, that call will give a sell signal. It is not going to drop from 50 to 10 in 2 minutes. Whatever theta decay happens, it will happen gradually, right? Maybe the underlying will fall or it will drop, and then there is a sell signal on the chart which I'll exit. Why be so scared of theta decay? There is a stop loss. You can place a stop loss in the terminal like you place on futures or cash stock and use that. So that also worked. Then I realized that how to identify momentum phase and sideways phase. For that, I needed, again, all these studies are completely self-developed, not read anywhere. No one has taught me anything like this at all. So I came up with an idea of why not plot charts of straddles or strangles. And that completely threw huge amount of opportunities, because based on that study, I started realizing I can easily find out whether an instrument, underlying, is in momentum phase or it is a sideways phase. And when to use, of course, a lot of people they look for going long in a straddle or strangle. I'm completely against that. Straddles and strangles are meant to be shorted, either shorted or I can, that is what I also do. I use them to understand a momentum phase or a sideways phase. And that is what I realized, that is a very good tool to understand that whether the phase is sideways or momentum. And then this continued till 2013, 14, almost 15. And I was presenting my studies at various conferences, which were well received. Around the same time, around 2015, I met Prashant Shah, who was just starting to develop Trade Point, which is Define Edge. And around 2016, we decided to join hands, and there it took another dimension. Much further upper level was reached by, because point and figure charts are definitely much more objective than candlestick chart, which is something which I had also studied myself earlier. So when there was a software which can be used to plot these charts at the sort of a single click or double click maximum, then I realized that that makes much more sense. And that's how that's where we are now. We have in fact taken it to a much higher level now, with so many other studies of open interest and PCR and TOI and a lot of other things. So, of course, the biggest thing which I can tell people is constantly keep learning. There is not a single day in my life where I don't look to learn. And since I have been self taught right from day one, there is nothing like I can, I mean, I know everything. That is just not possible for any single individual. If you start thinking that you are the king, that is the end. I mean, you can easily say that you won't progress. So even now, I constantly keep on, innovating with now the biggest advantage is we have a big IT team in house. So even if we come up with some sort of theory or pattern or system, it can be immediately tested by developing those charts in house and start testing them. So that thing will go on forever, and that is where we are now. Yeah, so that has been my journey.
Yeah. Abhi sir, you have rightly used the word like business with option trading, not like you have not said like option trading. You said like your journey started with business with options. Uh, Today, like see, F&O trading is a leverage trading. We should know the pros and cons of leverage trading, else it will be a disaster, right? So we
Yeah.
should not gamble with the F&O trading because it is a very leveraged product. Can you please explain to our audience what is F&O trading and who should trade in F&O?
Yeah, see the biggest problem nowadays, in fact, in our days, which was more than 15 years back, 20 years back, was you didn't have these kind of social media and groups where you had free access to information. Those days, we used to feel that, it was difficult to get information, but it was good in a way because we had to work to get that information, number one, and we could really decide or think what we want. Nowadays, the problem with youngsters is they have so much of exposure that they think everything is so easy, and social media is the biggest villain for that. If they see someone's success story, it doesn't mean that you are also going to be as successful as him, number one, because everything, for every single individual, everything is unique. You cannot copy what the other person is doing. In fact, even if there is a trading system, I always insist on, whenever I teach, I always insist that you try to bring your own contribution into that and tweak it, even if it is the smallest tweak possible, but tweak it to the extent that you can say that it is my system, it is not someone else's system. That makes a huge difference. If you just copy someone's system, first of all, there is no system in the world which will work every time. That is the biggest thing which people don't realize. And they if they start using it when it is in a bad phase, they'll start abusing that system, abusing that person also. The problem with that person is he doesn't know that the other person who introduced that system to him already has a tweak to make it work, or maybe some other system which he uses when this is not working. So if you had put in your time and effort to really understand that system and maybe tweak it or maybe develop or maybe use that as a base to make a system of your own, then you can be successful. There is no free lunch and there is nothing like easy money in stock market. That is the biggest learning which people need to understand right from day one. Sure shot and hero to hero zero and lottery and on expiry day, those are all time pass. That cannot be as a sort of a long lasting business. Trading has to be treated as a business. It cannot be part time. I mean, even if you are trading part time, you cannot say नहीं नहीं मैं सिर्फ 2 घंटा ट्रेड करके देखता हूँ, जमा तो जमा, नहीं तो I'll leave it. That is not possible. It has to be completely, you need to have the passion to learn, otherwise it's not possible.
Okay, okay, rightly said. So I had a question, like since many of the users are starting to get into F&O trading, and there are many things they have to look after and they may not have much knowledge. So what are some of the basic rule of thumbs that initial trader should follow, like the discipline-wise stop losses or profit booking, or in which all instruments you should try to get. And second question I had was like you mentioned about charts of options and legs of options and single leg as well as multi leg. So can you
Yeah.
give one example to our users like how you use those charts in getting a buy signal or sell signal? Like let's
It's
say.
difficult to explain on Twitter Spaces, but whoever has been following me on Twitter, then I keep posting a lot of chat. I'll just give you a small example which occurred very recently. I think it was last month, and it was not a option chart. It was a different study of open interest where Biocon had closed very strongly. It was near 374 or something like that. I think it was in January. I forget the date. But and there was some big positive news floating around that day about some stake sale or something. Mylan. I forget the news, but it was a positive news. So everyone wanted to buy Biocon. I just had a look at the open interest of 370, 375, 380 calls, and I realized that it's not as easy as it is going to be. I just tweeted a warning. Look at the open interest before buying fresh for overnight, especially if you are not carrying it, and don't go naked long. And this was a completely study based on open interest and options charts, which were for me they were topping out, and there was heavy open interest in the calls for that day. And as luck would have it, next day it gapped down to I think 355 or something. So anyone who had bought any naked calls would have definitely gone for a toss because he didn't even get any chance to exit. I remember someone had bought it at 7 rupees and next day it was some 1 rupee or something like that. So these are charts which I keep tweeting. So whoever sees my tweets and if they want to learn something, of course, I am always open to getting asked questions. And I always make it a point to reply to anyone who asks me questions. You have to ask questions. Otherwise, maybe for someone who doesn't know that, he might find it a bit difficult. And of course, we have a lot of free videos on our website also. So I will point them out to those videos and they can study in detail. But I keep repeating there is no free lunch. You have to study and learn yourself. You cannot rely on someone for your life.
Okay, got it. So, one more question I had, like my first part of the question was regarding some of the basic rule of thumbs that a new FNO trader should look at. So, like, can you give some examples of that?
Yeah, it's a completely absolute basics. A lot of people talk about options. For example, let's see that MD and lot size is 50. How many people are aware that one lot of Nifty is worth something like 8.8 lakhs, 8.75 lakhs, whatever the exact multiplication, 17,500 into 50. It's easy to say I trade one lot futures for 1.5 lakhs. But do they know that it is a double-edged sword? You are trading something, you are trying to trade something for 1.5 lakhs, something which is worth 8.8 lakhs. So understanding this leverage is extremely important. You cannot just see that nahi usne future long kiya, maybe long karunga. What are of course, futures can give big profit, but it can give big losses also. That's why I said it is a double-edged sword. So unless you really understand what you are doing, just because someone else is trading futures and options, don't jump into it without understanding. In fact, the biggest classic example was, I think in December, I read that case of someone who had bought Hindalco put some 450 put 10 minutes before expiry, and it expired in the money, and he had to bear a huge loss. That is completely because of ignorance, not aware of the rules. There are standard rules of SEBI which everyone should be aware. Of course, how to know all the rules is a different story. I really don't know. That is in fact a gray area. There is no single place where all rules are documented. But especially for newcomers, these rules are very important to know. Otherwise, it is going to be dangerous doing these things without understanding the entire subject.
Very true, sir. Sir,
Yeah.
but
Abhijit sir, you have mentioned open interest when you are explaining about Bicon. One example, even you are in Twitter also you're putting a lot of posts about the open interest. How do you decide your trade with trade using open interest? How we should read open interest? Can you please explain how you are deciding your trades using your open interest, or will open interest help you to take trades?
See, in fact, that is another thing which a lot of people make a mistake. In open interest is not a trigger for a trade. It is just the hint or the first step for a trade. What I look at is, in fact, that is another thing which I have developed myself. I look at open interest of the put as well as the call for a specific strike price. So if I'm looking at Nifty, let's say 17,500, I look at the put open interest of the put as well as open interest of the call. One big thing I've always seen people are suddenly uska open interest 300% बढ़ गया, uska open interest 10%. No, but what is the open interest of the corresponding call or put? It is extremely important for me to look at the call as well as the put at any single strike price, because finally it is a game of the PCR. That is my belief. Again, a lot of people have different theories. There is no force to use whatever theory. This is something which I have developed over the years. And unless I am comfortable with the PCR of that strike price, I have developed theories which say that any put call ratio of a single strike price, individual strike price, if it is less than 0.8 or 0.7, that is a bearish level. So let's say if, for example, 17,500 pieces, I don't know what is the figures today, but if it is not above 1, which means the OI of puts are lesser than the OI of calls, because put call ratio is put upon call, the open interest. So if it is less than 1, that means the open interest of the calls is more than the open interest of the puts. As simple as that. So for me, that is not a bullish scenario. So unless that changes, it is difficult to get a trade. That is number 1. But that is just a first hint. But since I also have the charts, there have been cases where open interest has started changing. I mean, put writing has started happening. Again, that is something which I tweet quite often. There is no support from put writers. See, for any level to become a base, a base in the sense of support, you need put writing at that level, at that strike price. So if that put writing is not happening, that base is not getting created. So that level is vulnerable to be attacked. As simple as that. So if I see put, even though the put call ratio might be below 0.8, but I see put writing has started, and it is visible on the charts also, the open interest. I also look at the chart of the open interest. That is another problem which a lot of people look at the option chain of on the NAC website or even broker terminals. Some broker terminals give the option chain nowadays. That is a static number. If you see that option chain at 11 o'clock and you see the same option chain at 12 o'clock, there will be different numbers. Again at 1 o'clock, there will be a different set of numbers. So you don't know how that even the open interest of, let's say, put at 11 o'clock, 12 o'clock, 1 o'clock will have changed. That is one change. The other change is how has the open interest of the call also changed at that time. It's impossible for someone to just look at the option chain and identify what is happening in the market. It's virtually impossible. So that is where these charts help. If the open interest of the put has started trending up, that means more. Of course, at the same time, I also look at the chart of the put, because that if someone is writing puts, that means selling puts. So the put has to keep going down. It cannot be rising, because that is a different kind of OI buildup. Of course, it's impossible to explain all that OI study here now. But if the open interest has started rising of puts and the put is coming down in price, in the premium, that means put writing is happening. And if the OI has started rising, if the chart tells me that it is going up, that means that support base is being created at that strike price by the bulls. So unless that support is created, there is no chance of even looking for longs till that time. So first thing is look for a base creation, number 1. Second thing is for momentum to come. Once the base is created, it's like a foundation of a building. But how big that building is going to be, how many floors are going to be there, 2 floors, 10 floors, 20 floors, whatever, that depends on the call writers. So if the call writers are not going to cover their open interest, that means they are not going to allow further increase in the price of the underlying. So once that put open interest has formed a base, and at the same time, after some time, it doesn't happen immediately. It happens after some time, maybe half an hour, 1 hour, 2 hours, sometimes next day also. The call open interest starts coming down. That means there is short covering in that call of that strike price, and then the price starts rising. So these are the two things which I constantly see for every strike price, and that gives me an idea whether let's say there has been a move of let's say 50 points in Nifty from 17, let's say 500 to 17,600. But after that, has the action shifted to the 17,600 strike price? That is also important, because fine, 17,500 has been protected by the bulls, but what about the next level? So the same study has to continue for the next strike price. So that is what I constantly see. And it is, like I said, it comes with experience. For me, it is a couple of minutes thing to identify what is happening. Newcomers will take time. But once you get experience, it's quite an easy thing to understand what is happening.
That's why, sir, we have invited you to take at least advantage of your over 2 decades worth of experience, sir. So, sir, as we were discussing that you get to see charts of the options, and if, let's say a person has taken a position.
Yeah.
Now, how important it is for them to put stop loss, book profits on time, and using trading model without putting any emotions.
See, stop loss for any beginner, in fact, why beginner? For anyone, if it is a trading instrument, I mean, if, let's say it is in futures or in options, like I said, you need to understand what is the risk involved. And that is where position sizing comes into picture, because a lot of people don't understand position sizing at all. It is completely related to how much risk you're taking. Sometimes the stop loss might be very attractive, maybe only 15 points, then you can go with a normal position size. Sometimes stop loss might be 30 points or maybe double of your earlier risk. That time you have to reduce your position. So that is something which you have to get used to. And I mean, there is no question of whether stop loss should be put into the system. You can put it a slightly lower than the actual level, fine. But there is no question of should stop loss be put into the system. I mean, I have met thousands of traders in my trading career. A lot of people have said that stop loss to hit hone ke liye hi hota hai. That is a standard, typical answer which I get by, people who don't use stop loss. That is all nonsense. I mean, that was a wrong stop loss in the first place. It is not that stop loss operator niche aata hai, stop loss leke upar jata hai. Then you again re-enter the bus, na? The re-entry is just a brokerage away. I mean, you can't say that operator ne mera stop loss khaya. That is the worst possible excuse which anyone can give. Stop loss has to be in the system.
And how do we decide on the target and the stop loss? Any idea? Like at least some ratios we should look at.
Yeah, it again depends on what kind of a trade, whether it's an intraday trade or whether it's a positional trade. It has to be at least 1:1. If you are taking 1 hour, that the target has to be at least same number. So minimum 1:1 has to be there. Of course, if there are bigger risk reward ratio, because risk reward ratio is something which is again not understood properly. People have to understand the basics of trading. See, again, risk reward ratio is sort of misunderstood. I mean, I can also tell you that buy Nifty at 17,500 with a stop loss of 16,500 for a target of 20,000. That is a very good risk reward ratio, but absolute nonsense, isn't it? How can it be 1,000 point stop loss with a 3,000 point target? But can I tolerate that 1,000 point stop loss? That is something which people don't understand. So how much risk you are taking? If that stop loss is hit and you lose in that trade, are you okay losing that much money? Target is secondary. Target comes later. First is the stop loss. Risk reward ratio. It's easy to say that nahi maine wo book pada. He does it with 1:3 RR and all that. But those are all all in hindsight. First thing you have to see is what is the risk you are taking. That is the most important thing. Target comes later.
Okay. And let's say, for example, we decided on a target. Let's say someone bought a call, a naked call. I'm not talking about debit spreads, just a naked call. And let's say he had set a target based on 1:1, but today that target didn't come. Tomorrow it may come or may not come, but tentative, the trend is continuing. So should he exit that call because he's a day trader, or can he or she hold it on, keeping his stop in his system for the next day? It's like a BTSD kind.
No, then you are changing the goalpost. You are changing your rule. If your rule, if you, for you, if it was an intraday trade, you have no business to carry it. At the time of taking, you have to decide whether even by 3:30 p.m. if the target is not hit, I am going to exit. That you have to make your own rules of trading. I mean, rule-based trading is again misunderstood. A lot of people think rule-based बहुत बड़ा कुछ PhD होता है. It's not PhD. These are simple rules which you have to make for yourself and write them down and follow them religiously. If you decide that I'm going to take this trade as an intraday trade, and at 3:29 p.m. your target is not reached, stop loss has not been hit, and most of the occasions why people carry positions overnight is because they are in a loss. Let us be honest. No one carries, I mean, very few beginners carry profitable positions overnight. Most of the positions which are carried overnight are loss-making positions. It's difficult to find out the percentage, but I would say it will be 75-80% of new traders.
Absolutely, sir. What you're saying is right, and no one puts this time stop in the system. Okay, 3:15, 3:25. We'll just we'll just close our eyes, enter and exit the position.
Yeah, and again, that is of course a debatable topic. How much is fate important? A lot of people will say, okay, I exited it at 3:25 p.m. in a small loss, and next day it gapped up. That is your nasib. You can't help it. If you had carried it, it would have gapped down.
Absolutely. Absolutely. And this is so important. One of the most important thing is, which you taught us all today, putting a time stop in the system at least. Just go checking out open orders, select them all and just enter exit if it's a day trading strategy.
So you have to decide before taking a trade whether it is an intraday trade or a positional trade. And if it is a positional trade, and sometimes happens that you take it as a positional trade, but maybe there was some big move and your target was hit on that day itself. Fine, exit it. Because even it's not that you have to carry it because it was a positional trade. If your target has been hit, there is no harm in exiting. See, you are the king of your own account. No one can force you to do anything. But what I mean is, you make your own rules and you have to follow them. No one is going to come in. It's not like a school where some principal or a teacher will come and check whether you have followed your rules. It has to be you yourself who, first of all, makes the rules and monitors them.
Abhijit sir, you spoke about rules. Some people create a rules. It can be algo or any kind of rules, trading rules, and they do the backtesting. And backtesting gives a wonderful result. Maybe there may be for say 3 losing streak and 8 winning streak. So those kind of things. But when we go for a live trading, it may be it's like a bouncer. Maybe 5 losing streak or sometimes continuously losing streak comes. Then we immediately change and we move to another strategy. Again, it will happen the same. Again, loss or profit. Again, we change. Means continuously we change the strategies. So how can we be disciplined and follow one strategy? What is your advice on this?
No, see, it all depends on the system for which you have done the backtesting. If you have, how much period should be backtested is a relative term. Some people say 6 months, some people say 2 years, some people might say 10 years. So that is a different thing. But if you have religiously done the backtesting and you have arrived at the statistic that this system has not given more than 5 consecutive losses or something like that, or this is the total loss which it has given. So there is no reason for you to start ignoring that system if that statistics have not been met. If you get higher loss, naturally, in fact, if that is also possible that even most of the systems are seasonal is the wrong word, but sometimes they work, sometimes they stop working. At the same time, a lot of people don't follow the system which they create and which they know that that system has performed well. Because one extremely important thing which people ignore is when they do a backtest for whatever 6 months, 2 years, 5 years, that time it is a completely emotions-free backtest, whether it is a completely automated backtest or a visual backtest, whatever. They don't know. Let's say they have done a system by which it gave a buy on whatever 10th April 2020 and exit on 10th May 2020, whatever. It looks so easy on a piece of paper. But the biggest problem is when people start trading that system, then they, अरे आज बाइडेन ने ये बोला, आज पुतिन ये कर रहा है, उधर वॉर चल रहा है. Problem is when they dig that backtest for those 6 months, they don't know what was the news process, news flow in that 6 months, 1 year. Now, with the backtest to be traded, you start also following the news. And that is the biggest villain for people, why they don't follow the system.
Right. Abhijit sir, many people say like learn from others' mistake. हम लोगों ने सब mistake हम लोगों ने नहीं करना चाहिए बोल के. Even in trading, I have did lot of mistakes. Like मैंने stop loss डाल के रखा था, profit book किया, but stop loss मैंने हटाया नहीं था, stop loss trigger हो गया और loss हुआ था. And कई बार ऐसे भी हुआ था कि buy करने की जगह मैंने sell किया था. ऐसा आपने कोई mistake किया था क्या सर? And what was your learning?
See, it's easy to say learn from others' mistakes. It is impossible that you will never make a mistake. Impossible. You have to learn from your own mistakes. Fine, you can read and you can talk to other people. You can make sure that you will, at least you should be aware of how you will behave when you reach that, face that situation. But you have to make mistakes. Without making mistakes, you cannot learn. As simple as that.
Okay.
It's just the question of how much loss you are going to make by making a mistake. That is something which again depends on the risk you're taking.
Right.
Training fees given to the market.
Yeah.
I call it the training fees given to the market.
Yeah, absolutely. Nothing is free in this world.
Yes.
More so with trading. And another thing which a lot of people go with FNO to start with, I have another big thing to tell them. A lot of people on Twitter must have seen the successful US trader Mark Minervini. He hardly trades derivatives. He trades most of his trades are cash. And he's still doing extremely well. In fact, recently he won that US investing championship with some, I forget the number, some 300% or something. He has been having 3-digit returns for the last 10 years or something like that. I don't know the exact figures, but those are the statistics. And that is mostly in cash. People say that, no, but we cannot short. But then there is always a bull market somewhere. There might be some sector, even in a bear market, where, for example, when the COVID crash happened, the first out of the blocks, first sectors was pharma and IT. So even when banks were still going down, IT and pharma give. So there is no reason why you should trade in FNO when you can still make money in cash. Another big advantage of cash is there is something called partial profit booking, which is extremely important for newcomers, especially. It is good for everyone actually, which you cannot do we are talking about people with small trading accounts, so they mostly with one lot kind of traders. So they just do not have the way to book partial profits, which you can, for example, if you buy Reliance or maybe TCS of maybe 150 lot in futures. But if you buy 150 cash, of course you require more money, no doubt about that. You can buy only 50 shares, but you can book 10 shares at some level, which you cannot in futures. So for any newcomer, it is a bit risky to start with FNO. It's better to start with cash, get used to trading a system, and then start, even thinking about futures and options is at a later stage. Don't jump into futures or options to start with.
Right. So yeah,
So Vijit, I had one question. Okay.
Yes, Manoj. Yeah. Go ahead.
Yeah, so people who start investing, they have a common pool of capital and they don't segregate between how much should they trade and how much they should invest. So and they don't keep track of it. So for beginners, how do you recommend how much of the percent of their whole investing capital they should put for trading, especially the position sizing you're talking about. So can you give some example here for a new trader and what all he should see while defining his percentage of trading capital?
See, first of all, if you're talking about new traders, I don't think there is going to be any young new trader who has a very big capital. Mostly it will be maybe 2 lakhs, 5 lakhs, that kind of capital. So in that, whether to think of long term immediately, that is the biggest question which people have. So for that, they need to allocate some capital every month for maybe SIP or make a list of your favorite stocks and buy them every month or something like that. But don't put everything into trading. You need to have both. And when you ask me how much percentage, That is a completely, I mean, there is no single percentage which you can say that, okay, use a 80-20 rule or a 70-30 rule. It again depends on the person's account size, age, his liabilities. And I mean, there are so many people who have no liability. No, when I say liabilities, is they are bachelors, they are living with their parents, they have a good salary, maybe a job or whatever, and they have good amount of spare money every month. So they're just burning it in the stock market. So treat it as a business, and you have to decide yourself how much you want to keep trading and keep burning. And if you are successful, of course, then there's no point. I mean, you can use more capital for trading if you are successful. The point is, people who are still not successful keep putting money in trading FNO and keep losing it, and they don't, because of that, they don't look at the long term portfolio at all. That is extremely important, having a balance.
Right. Abhijit sir, I have one more question. When I talk with many new traders, they usually say like, I want to become a full-time trader. अभी मैंने एक साल में बहुत अच्छा profit किया. This is my profit, like a percentage of profit and all. So, what message you have for these new traders who has means come from after COVID? They came and they did very good in trading or investment. If they want to be a full-time trader, and how much money they should have, how much backup they have, and what are the like some points you want to suggest for that?
See, again, that is a standard question which a lot of people ask: how much money do you require to become a full-time trader? That trader, if he wants to become a full-time trader, and if trading is going to be his only income, first of all, that is the biggest hurdle which he's going to face, because that means there is every day there is pressure on him to earn, if not daily, at least on a weekly basis. Because if his entire income is going to come from trading, he first of all needs a robust system. Second thing, he has to be realistic. He cannot say I'll earn 20% a month. A lot of new traders who might have experienced that kind of success sometime in the last couple of years because of COVID, a completely trading market, that is just not possible month on month, year on year. You have to be realistic. Even if you do 2 to 3 to 4% consistently, that is good enough. But then you have to work backwards. If your entire income is from that capital, and okay, fine, you might say you don't have liabilities right now, but you will get married at some point of time. You will have kids. You have to look after their schooling and college. So that capital needs to keep growing. So it has to be a very large capital. A lot of people make the mistake. I have 5 lakh rupees. I want to become a full-time trader. It is just not possible. I'm sorry to say, I might disappoint a lot of people, but that is just not possible. People should not even think of doing that, because full-time trading is a full-time business. You need much larger capital. Even 50 lakhs might not be enough to become a full-time trader.
Okay, so कई लोगों ने ऐसे भी बोला था कि why you want to be a trader, because I have a lesser salary. मेरा सैलरी बहुत कम है, इसलिए मुझे ट्रेडर बनना है.
But at least हर महीने उतना तो आता है ना पक्का.
Yeah, right.
That is something which people don't understand.
Right. This is the message for everyone, I think. To become a full-time trader, you should be means how many years? Like this is one thing is like you have mentioned as a capital.
Okay,
right?
Before one more thing which I wanted to say about full-time trading. I know a lot of people who have very good, comfortable jobs, well-paying salaried job. Of course, not stock market related, completely different. But they still have their own trading systems, which are based on EOD data, which are not intraday. And they are doing extremely well even in their trading. So that is also extremely important. You don't need to be in front of the screen throughout the day, 9:15 to 3:30, to become a full-time trader. They also are full-time traders in that sense, but they also have their salary and their jobs going on at the same time.
Absolutely, sir. Absolutely. And even I also agree with you absolutely on this. See, don't we all trade? Peter trades, Manas trades, I trade, but we all we can't sit in front of the screen. And this is something which, like you said, advised people right now that you can do it full time.
Hello.
Shankar, I can hear you, sir. We lost Shankar. I think he dropped.
That's what.
Yeah, maybe he dropped, I think, sir.
Yeah, in fact, that was a good thing he said. Looking at the screen constantly throughout the day is extremely dangerous for your trading life. The screen is a naughty animal, and it can give stray thoughts in your mind and force you to do something which you would not have done otherwise if you were not on the terminal. So staring at the screen is not something which you should do if you are not, especially for a beginner. And it takes time to get used to looking at the screen and not doing anything crazy.
Right. Abhi sir, we spent around 50 minutes. I think we have to close now. Before closing, can you give some tips or for pros like that is our topic today's pros and cons and tips for new traders. Can you give some tips for our new traders as a final or closing remarks?
Yeah, the biggest tip, which in fact, I have already spoken those things, but just to summarize, the biggest tip is learn yourself, understand what you want to do yourself. Don't rely on someone else for the entire trading system. It has to be something which you can own by saying, this is something I have developed. Maybe you can learn it from someone, fine. But finally, you have to say, this is a system I'm going to use, trading system, and it is your system. And if you are even more capable of tweaking that system, even better. So you can, seriously say that this is my system. It is. I see a lot of people on Twitter who say, "Uska system follow kar raha hu, but now it is failing." He has some other system which he has started. He's not going to tell you everything which he's doing. So this is something which you cannot learn. Trade successfully completely being dependent on someone else. This has to be a self-help kind of trading. You have to learn yourself. That is the biggest tip I want to give, that there is no, easy money. There is no free lunch. It has to be self-taught.
Right, sir.
Trading should be considered as a business. That was the message you have given to us.
Yeah, trading has to be considered. If you are opening a shop or a factory, how you would run trading like that.
And it's, of course, also something, sir, which you rightfully said. One should have realistic expectations. Trading is also something like one should start checking out how deep the market is for him, how much risk he can take. Based on risk appetite, he should enter the market. Maybe he initially starts off with delivery and then slowly and steadily starts getting into options. So understanding open interest, looking into chart, understanding of charts, following and getting knowledge from different sources. It's very important for the person to slowly and steadily pick up skills and then start trading.
See, it is simple thing, like every individual can go back to his, in his mind, to his college days or school days, and imagine a scenario where he is sitting with 30, 40 other students, which are, for now, they are traders. And every single person was different. Every single person's grasping capability was different. And there was only one teacher who taught them. In this case, there is only one market which teaches you. But every single person learned something different and at different levels. Someone has become a CEO or vice president of some multinational company, and someone is still doing a clerical job in Pune. So that is something which you have to understand, that it's just not that usne kiya isliye main bhi kar sakta hu. That is just not possible.
It is just a probability, and whoever is more dedicated will definitely win the race with lot of discipline. That was the message from you, sir. So thanks a lot, sir, for attending, taking out your time and helping us learn from your enriched experience and sharing your experience with us. Thank you, Peter.
My pleasure.
Thank you, Peter, Manas, for the lovely questions you asked. And thank you, Harsh, for organizing such a nice show. And thank you, all you lovely people whose hunger for knowledge definitely is going to make you successful. So with that wish for all of you, we would like to end our session today. Thank you very much for attending. Thanks a lot.
Thank you. Bye-bye.
Thank you, Abhijit sir. Thanks, Shankar. Thanks, Peter. Thanks, Harsh, for hosting.
Thank you, everyone. Abhijit sir, thank you.
Thanks, everyone.
Thanks for joining us.